Welcome to our video on the top 5 famous traders and investors who ended up in jail. While the world of finance can be incredibly lucrative, it can also be a high-risk environment where not everyone plays by the rules. From insider trading to Ponzi schemes, let's take a closer look at some of the most notorious examples of traders and investors who have run afoul of the law. 1. Bernie Madoff. Perhaps the most infamous name on our list is Bernie Madoff, who perpetrated one of the biggest Ponzi schemes in history. Over the course of several decades, Madoff defrauded thousands of investors out of billions of dollars, promising high returns and paying off early investors with the money from new ones. Madoff was eventually caught and sentenced to 150 years in prison, with many of his victims left financially ruined. Madoff's scheme was not only massive in scale, but also extremely complex. He used a split-strike conversion strategy to make it appear that he was generating consistent returns for his clients. In reality, the strategy was a smokescreen for the Ponzi scheme that he was running. Madoff's scheme collapsed during the financial crisis of 2008 as investors began to withdraw their money in large numbers. 2. Martha Stewart. Martha Stewart, a well-known lifestyle guru, was found guilty of insider trading. In 2001, Stewart was tipped off by a broker about a pending stock drop of a biotech company called ImClone, which she sold off. When the investigation was conducted, she was found guilty and ended up serving a 5-month prison sentence. Stewart's case highlighted the dangers of insider trading, which is illegal and unethical. Insider trading involves using confidential information to make trades that benefit the trader at the expense of other investors. While Stewart's case was relatively small in scale compared to some of the other examples on our list, it still had a significant impact on her reputation and career. 3. Rajaratnam. Rajaratnam was a hedge fund manager who was convicted of insider trading in 2011. He was accused of making millions by trading on insider information about companies such as Goldman Sachs and Intel. Rajaratnam was sentenced to 11 years in prison, one of the longest sentences for insider trading ever. Rajaratnam's case was notable not only for the severity of his sentence, but also for the scope of the insider trading that he was involved in. The case involved a network of insiders, including executives at companies such as Intel and McKinsey & Company, who leaked confidential information to Rajaratnam and his associates. The case was seen as a major victory for the SEC in their efforts to crack down on insider trading. 4. Jordan Belfort. Jordan Belfort, also known as the Wolf of Wall Street, is a former stockbroker who was convicted of fraud and money laundering in 1999. Belfort's firm, Stratton Oakmont, was involved in a range of fraudulent activities, including pump and dump schemes and penny stock fraud. Belfort spent 22 months in prison and was ordered to pay back millions of dollars to his victims. Belfort's case was made famous by the book and subsequent movie The Wolf of Wall Street, which chronicled his rise and fall in the financial world. Belfort was known for his lavish lifestyle, which included yachts, sports cars, and private jets. His story serves as a cautionary tale about the dangers of greed and excess in the financial industry. 5. Nick Leeson. Nick Leeson was a derivatives trader who famously brought down the 233-year-old British bank, Barings Bank. Leeson was engaging in speculative trades that ultimately resulted in the bank's collapse, and he had been covering up his losses for years. He was eventually caught and sentenced to prison for 6 years. Leeson's case demonstrated the importance of risk management and the dangers of unchecked speculation. In conclusion, the examples of traders and investors who have ended up in jail serve as a reminder that the financial industry can be a high-risk environment. It's crucial for investors to do their due diligence and be aware of the risks involved. While it can be tempting to pursue quick profits, it's important to remember that there are no shortcuts to success in the world of finance. By learning from the mistakes of others, investors can hopefully avoid making the same costly errors.